on and talk about a FMCG stock. Let's talk about Emami. Now, Emami, we've seen that yesterday the stock was running up in trade. But before that, when you look at it, it's not much of a outperformance versus other FMCG players in the past that we've seen from Emami. But what's interesting for Emami, what could work out well in terms of a trigger, the rural exposure, look at it. It's the highest amongst the FMCG players. 50 to 55% of their revenue comes in from the rural exposure. Now, the government is expected to focus more in terms of the rural story, in terms of the growth story that will come in there. Previously, it was more capex focus. Now, this time they're going to be focusing on rural consumption. Good monsoon, so that leads to a rural recovery. So their volumes will improve, and that would be better volume growth, stronger volume growth, aiding the overall growth of the company. Other than that, the other point that works out, a possibility of is that Emami's FII Holdings, that is, amongst the lowest, one of the lowest when you look at it in terms of the FMCG side in the FII Holdings part. Look at it, it's at around 13%, 13.5% is what I would specify versus HUL, which is at 12.6%. So yes, it is amongst the lowest in terms of the FII Holdings, and the buzz is that, there is an increase coming in for the FII Holdings. FII are increasing their stake in Emami, so that will be very interesting. And let's not forget why, because Emami has the cheapest valuations right now, among the cheapest valuations, when you see a pure play FMCG, barring IGC, I'm talking about the other names, Marico, Dabur, HUL, Nestle. Emami is surely trading at a cheap valuation, 33 times 1 year forward. FY26 P is what I'm looking at right now. So yes, a lot of positive triggers will come out for Emami in terms of the story to play out, and the cheap valuations is something that could possibly support the run-up for Emami.
If you like this video, then like, share and subscribe to ET Now.